Hilton brings you new ways to stay, with experiences that let you capture the glory days. Introducing the Graduate Hotels. Each inspired by local college towns, these stays are always original and never boring. Get in touch with traditions all across the country and enjoy a stay that's a class above the rest. Book at Graduate Hotels with Hilton Honors Points at Hilton.com. It's a win-win. Hilton, for the stay.
Llévate más de lo que esperas todos los días con el nuevo McValue en McDonald's. Ahora puedes comprar uno y sumarle otro por $1. Así que cuando tu equipo favorito enfrente a sus rivales, enfrenta tus antojos con $5 Meal Deals. Y si estás corriendo para alcanzar el desayuno, corre al app para llevarte ofertas antes del cutoff. Tú decides, y con McValue, tu decisión siempre rinde más. Precios y participación pueden variar. BOGO $1 válido para un producto de igual o menor valor. Debe estar registrado en Rewards para ofertas en el app.
Welcome to the episode of Nature Back. Today I have two guests from MUUS. Welcome, guys.
Thanks for having us, Tarmo. Good to be here.
Absolutely.
To start off, say a few words about what is MUUS and who are you exactly? What's your role in MUUS?
Do you want to lead us off, Kavita, and then I'll follow?
Yeah, I can kick us off. Thanks for having us on Nature Backed. We are MUUS Climate Partners. We're a early stage climate tech VC based in New York City, and our thesis is to invest at the convergence of advanced technology and decarbonization. I'm a principal on the investment team, and I've been with MUUS for coming up on 4 years now. Prior to that, my background is in asset management. I was at BlackRock covering sustainable and traditional investing for insurance companies, and kind of started my career dealing with the beginnings of ESG and sustainable investing after a lot of California wildfires and Hurricane Harvey back in the day. And that snowballed into joining climate tech as a venture investor.
And more California wildfires, and I mean, the snowball is rolling, right?
Unfortunately, I think over 90% of Americans have been impacted by a natural disaster in the last year. So it's definitely...
And you don't mean politics, right? Sorry.
I was going to say storms and tornadoes and wildfires, but I guess they can be metaphorical as well as physical.
And Logan,
I'm Logan Grizzel. Yeah. I'm one of our partners here at MUUS Climate Partners. And I've been focused on how to leave the world a better place than I found it for my whole career. I started off my career in automotive because that was our number one challenge area for a significant period of time, focusing then over time on the electrification of transportation there with a variety of solutions. Because if you can electrify the powertrain, you can do a almost 2x efficiency improvement versus internal combustion. So from there, I moved over into consulting, working on energy efficiency, demand management, and e-mobility work. And then after that, moved over into venture to start supporting teams who are coming up with innovative solutions to help move us forward towards our goals.
In 2025, what's the most exciting segment in this climate investment scene you are seeing?
I think everyone's talking about load growth at this moment. We've been historically in a period where there hasn't been load growth on the grid in the United States, but given the increasing compute loads and the AI arms race, or whatever we're calling it this week, there's been a lot of chatter about clean, firm power, about improving energy storage to make intermittent renewables work at a utility scale, and issues we're having with transmission and distribution. So if there was one sector that was going to be hot right now, it would be grid tech in order to deal with the increasing loads that we're experiencing in the US right now.
And that's classically massive investments, right?
Typically, yes. There's improving the grid takes time and it takes resources. And that's always been a bit of the challenge. That being said, there are some innovative solutions these days where you can improve the control systems behind many things to free up extra capacity. And there's a number of those type of solutions that are entering the market as well. that enable you to improve both the efficiency but the productivity of the system as well.
At Capella University, you can learn at your own pace with our FlexPath learning format. Take 1 or 2 courses at a time and complete as many as you can in a 12-week billing session. With FlexPath, you can even finish the bachelor's degree you started in 22 months for $20,000. A different future is closer than you think with Capella University. Learn more at capella.edu. Fastest 25% of students. Cost varies by pace, transfer credits, and other factors. Fees apply.
On the kind of investment thesis level, how much is there kind of software focus? Classically, VC investors often chase the, software which will make the world a better place, which, we know with, the EV solutions, for example, software alone can do only so much, right?
Yeah, I would say we're definitely lovers of the physical world and believers that software is not going to solve all of our problems. I would say over 50% of the portfolio is either hardware or hardware-enabled software or software-enabled hardware. We've got, mobility, built environment, and energy solutions that are all in the physical world. Our latest investment, speaking of grid and off-grid tech and resiliency, as we started off at the beginning of the call, our latest investment is in off-grid energy. And one of their initial focus markets is post-LA wildfires, how they can help the community rebuild there. So software solutions are important, and I think especially for investors who climate tech is only one of their sectors, it often tends to be a popular place to start. But we're believers that, you really need to make change in the physical world if we're going to move the needle on. I don't know if 1.5 is still the true target, but let's say below 2 degrees C now.
1.5 is probably a lovely dream for the political speeches in some countries. I think realities are much grimmer. I was already, checking that whether the 3 degree world podcast is already launched. There is their 4 degree podcast, which is set to be launched soon or something like that.
I do think it's interesting that in the last year, at least in the United States, adaptation and resiliency plays have taken center stage more because people are seeing truly what those impacts are when we're not even close to 2 degrees C yet. And this is already what's happening. So we have a couple investments that are in the wildfire space, or like we mentioned, the resiliency space, like backup power, off-grid power. How do you keep the lights on after a natural disaster and start rebuilding from that? And you're definitely seeing more activity there. I think a decade ago when people were starting out, and when I was starting out in insurance asset management, that was in vogue. And then we kind of moved into carbon removal, carbon mitigation space. But I think there's a backtracking now to say, how can we still thrive while the world is heating up and creating all of the, just last week, Logan and I were at a site visit for a portfolio company in the Midwest, and I couldn't get home because of what they were calling once in a generation storm system. But these once in a X things seem to be happening more and more frequently, and we have to figure out a way to still live and go about our daily lives.
Generations are shorter and shorter, basically.
At least in the climate perspective.
They are, definitely. I spend quite a lot of time these days with a company making hydrogen generators. So all these topics like resilience, grid, power outages, all these are kind of part of my daily workflow, so to say. But I wanted to ask you the kind of talking a lot about energy, and I think like a year ago, a lot of 2 ago, there was a lot of climate investment. I would say probably climate investment was a lot in vogue, and people were talking mostly about carbon and carbon markets and all these weird things. have you seen some kind of shift inside the kind of climate investment scene, or how do you see it?
Absolutely. It's kind of funny in how you put that, because one of the things that we constantly are focused on is fundamentals are always in vogue. There are times when that becomes less so as the markets pursue certain technologies, but particularly in times of challenge, your fundamentals come back in vogue at a very strong level, which, what is good fundamentals? At the end of the day, it's kind of three key things: good operations, good sales, and good margins. And if you can maintain that, you're an attractive business, kind of no matter the environment, no matter the sector of the environment, and no matter the external environment there to a large degree. If you're trying to stimulate some kind of intangible premium, that's always a challenge in times where it is a little more constrained and you're in a bit more uncertainty. We're definitely seeing changes throughout the industry, both at industry events, how people are talking about things, and how people are looking at financing. Recent events have kind of opened the eyes of many participants in the market, both on the company side as well as the investor side there too. And that's leading to people adapting their approach so that they can reword the opportunities that their solution creates in kind of an all new set of terminology versus what they had been using the past couple of years, but is still equally true and focuses in on the kind of levers that are growing of importance in kind of the current environment there. And happy to dive in more if you've got, further questions on that.
Absolutely. I mean, it's a really interestingly put that the fundamentals are always in vogue. I mean, looking at the global startup investment scene, I would say the only thing in vogue is AI. And, you can claim the AI is a fundamental, and, it kind of will be, or if it isn't yet. But, and let's say, if you look at my region, that maybe I think 2 years ago, climate investing was a really big thing in this part of the world. After that, Russia attacked Ukraine, and actually defense investment has become a really the hottest topic in our neighborhood these days. So the kind of these fashions tweak a little, but it's interesting to see how the kind of climate investment scene is also shifting. It's still climate investment, but it might be somewhat different things than the intangible carbon credits, carbon credit futures, right? Or something else which would be really weird.
We've definitely seen a shift where the, let's call them crossover investors who invest in climate tech as one of the verticals have been pulling away more from climate tech in the last, 12 to 24 months. I would say that, we're seeing more productivity narratives, more domestic supply chain, resilient supply chain themes. And you mentioned defense in Europe. There's also a lot of overlap between traditional climate tech and defense now, with regards to critical minerals, off-grid energy, and things like that. But in preparation, Logan and I were talking about what about the companies that don't fit into the AI boom or nuclear or geothermal or all of these things that we're saying are hot topics these days. And really what matters is productivity in the current environment. In addition to the fundamentals, what are solutions that help industries do more with less? Solutions that enable you to reduce overall cost. Maybe you're consolidating your supply chain. We talked about COGS simplification as well. A lower dependence on international supply chains, or something that enables rapid changeability. We're entering a period of prolonged uncertainty. And I think many people thought this would be fleeting and we would be back to a business as usual scenario, but that's absolutely, in our view, not the case. And so any solutions companies can provide that reduce that uncertainty and increase productivity and have a narrative around that, it is still going to win, even if you don't have the latest and greatest in efficient compute for AI.
This episode is brought to you by Shopify. Forget the frustration of picking commerce platforms when you switch your business to Shopify, the global commerce platform that supercharges your selling wherever you sell. With Shopify, you'll harness the same intuitive features, trusted apps, and powerful analytics used by the world's leading brands. Sign up today for your $1 per month trial period at shopify.com/tech, all lowercase. That's shopify.com/tech.
This episode is brought to you by Greenlight. Get this. Adults with financial literacy skills have 82% more wealth than those who don't. From swimming lessons to piano classes, us parents invest in so many things to enrich our kids' lives. But are we investing in their future financial success? With Greenlight, you can teach your kids financial literacy skills like earning, saving, and investing. And this investment costs less than that after-school treat. Start prioritizing their financial education and future today with a risk-free trial at greenlight.com/Spotify. Greenlight.com/Spotify.
Quantum computers for AI. Right. That's what Probably you could raise billions for these kind of things these days. But I was thinking about this shift on a kind of maybe deeper level. If one would launch a carbon startup today, how likely is the team to raise capital compared to 3 years ago?
I think that if you jumped in, it's a little bit of a question of what do you mean by carbon startup there.
Yeah.
So like if what you're doing is selling carbon credits generated for the voluntary market, that's going to be a very different experience. But if you're taking that carbon and you're transforming it into a usable material that can be a primary input material for a lot of industrial or commercial processes, you're going to have a very different experience in the current market. So I would say that's kind of the both blessing and the curse of this area. People in the past have noted climate as just kind of one small vertical sector, but in reality, climate is every single part of our economy. It's just there's better ways and there's worse ways to do something. And if you can come up with a better way of doing it, then you have a positive impact throughout the entire space. And
Absolutely.
that positive impact can play through and be your sole focus, or it can be a just kind of ancillary benefit of something that you're focusing on. And that's also what we have seen in narrative shifts among companies. Previously, teams may have focused more on the net impact of their solution from a carbon narrative, but now they're focusing on the other parts of that narrative where it's providing supply chain resiliency, energy efficiency improvement, an all new material with a easier to source inputs and better output and life cycle. So there's multiple ways of looking at things, and I think the more successful teams are ones who can pivot on their narrative to match what the market is looking for at that time.
It's interesting how the pivoting often happens on the product level to match the consumer needs, and then it happens on a narrative level to match the investor needs.
Indeed. Though you shouldn't underestimate the narrative need for the consumer as well.
Of course.
Corporate buyers are subject to that just as much as investors.
Agreed.
I
Totally.
will also mention, there is still a lot of capital that needs to be deployed, so that the money is out there. We're kind of just in a, tale of two markets, as Logan would say. And the other thing I would mention is the capital stack has matured significantly, even in the last 4 years. And so we're seeing companies position more to receive non-dilutive financing, whether that's equipment financing or venture debt. And so one thing we've been working with our portfolio companies on is actually how can you structure this contract, or what equipment can be financed creatively in order to not need to raise as much equity dollars and be able to, still operate effectively and move forward on commercial goals, even when fundraising timelines for equity rounds is extending in the current environment. So founders are getting creative on what their financing stack looks like.
Been living this for a while, so that's totally the same case on this side of the world also. The thing I wanted to ask, we were talking about the importance of fundamentals and how there will be always demand for the kind of fundamental solutions which make the world a better place. But if you put it into the context of today's news flow, how the markets are tanking, and the world's largest economy, or these days second largest, is closing its borders, or basically doing that. How do you see this kind of changing the dynamics of this industry? I mean, of course, it will take a week or two before this episode airs. So in the US news cycles, that's like 20 different stories, let's be honest. But
it is lately, sadly, all too true there. I think there's going to be a few things. One, you need to be able in this market to be able to espouse that narrative very clearly, particularly in a rapidly changing environment. But there's some things in a rapidly changing environment that people always look for. So if you can focus your narrative towards that, you're going to be in a stronger place during that period of uncertainty. And kind of taking a step back, what are those kind of broad narrative drivers? You have productivity improvements. So doing more with less. That's always in vogue, but it's particularly in vogue in challenging and uncertain times. Then you're looking at just overall value drivers. Can you control your costs better is another way of putting that. So sometimes teams do that through vertical integration, through COGS simplification, through process improvements, and supply chain efficiency pieces. There's a lot of opportunity in particular with robotics and AI in that very aspect of things. And then there's a resiliency opportunity narrative there, because in the increasingly uncertain world, a few years ago, you may have told a resiliency narrative in the context of climate change and natural disasters. Now you may be talking about it in more of the political, philosophical nature of storms versus the, reality of storms that you're going through. But if you have a solution that's improving the resiliency of operations of a supply chain, that's improving your speed of adaptation from a solution both in-house or for a customer, those are going to be some really attractive narratives in this kind of timing.
Absolutely.
Ryan Reynolds here from Mint Mobile. I don't know if you knew this, but anyone can get the same premium wireless for $15 a month plan that I've been enjoying. It's not just for celebrities. So do like I did and have one of your assistants switch you to Mint Mobile today. I'm told it's super easy to do at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Brace the rudders! Raise the sails! Raise the sails!
Captain, an unidentified ship is approaching. Over.
Roger. Wait, is that an enterprise sales solution?
Reach sales professionals, not professional sailors. With LinkedIn ads, you can target the right people by industry, job title, and more. We'll even give you a $100 credit on your next campaign. Get started today at linkedin.com/results. Terms and conditions apply.
Looking beyond or looking further into the 2025, as my last question was saying, things will change every day these days. But how do you what are the advices you're giving to the teams you have invested in, or what are the advices you're giving to the teams you're maybe negotiating the deals at this point?
I would say, there are hot sectors right now, and there are sectors that are less loved right now. The founders that are still getting funding that are in those quote unquote less trendy sectors are the ones who are realistic about the current market environment. You always have founders are always unreasonably optimistic. That's their job. They're the what if people, and the venture capital investors have to say, what if it doesn't happen? Then what? And I think, those who are unrealistic about the current market environment, who think that, their IRA provision won't be affected, or that demand will come back for sustainability-driven reasons, is not going to land well with investors today. You really need to have a crisp reason for why you're still solving, a top 3 pain point for your customer base, and that they would still move forward with the solution regardless of if we're in a period of prolonged uncertainty or not. And so founders who can think nimbly and creatively, who still have a customer base who finds their solution imperative, even when we might be going into a downturn, are still getting funded, even if you don't have the latest and greatest AI startup.
And just kind of expanding on that, I would provide a simple rubric to teams. People pay to reduce pain. So no matter what your market is, if you can have a very clear narrative of understanding your customer, what that pain it is that they feel, and what your solution is going to solve regarding that pain, that's how you can really move the needle, even in uncertain times. And that the clearer that narrative is, the more it'll stand out for investors as well.
Absolutely. You guys still in the investment mode, or are you looking from a distance the teams this year?
I think we're taking a step back a little bit to try and understand what is the implications of all the recent policy changes in the U.S. As you noted, Tarmo, that this is a time period of news cycles in hours, not weeks, and that provides a lot of changes in a dynamic way to the environment and the impacts therein. And it's something that, as an investor, you have to try and figure out what are those impacts and what can we rely on in a way is very different now than it was even 3 months ago. In kind of basic understandings, as I review a business model, for example, if you've got an implicit assumption of a stable tariff environment, that was a valid assumption for a very long period of time, but is not really the case in the kind of current situation we're finding ourselves in. So we're looking for some more stability regarding policy, because as the old rubric goes, business loves predictability and stability. And the less you have of that, the more challenging it is in placing those bets, particularly when you're doing it with other people's money, which is what we do as investors.
There's been a lot of activity around supporting portfolio companies, and Tarmo, to the discussion around founders that we love to back. There have been several vignettes of, taking advantage of distressed asset purchasing to the benefit of the business, and thereby reducing CapEx needs for the future. We talk about how to price contracts in order to unlock debt financing. We have companies that are engaging with local politics as well as national politics to raise awareness of how bipartisan their solutions are. And so there's been a high-level engagement with the portfolio on how to effectively navigate this environment, and that's where a lot of our focus has been in the past few weeks.
Thank you, and good luck into this turbulent year.
All right, thanks for having us. It's great to be here.
Absolutely. It's been a pleasure.
If you like the show, subscribe and leave a good rating on the podcast platform of your choice. It would mean a world to us.
Why is it that games make us feel so good or completely rage quit? These emotions we feel are mostly not an accident. People like me designed them. I'm Chris Cross, and this is Brain Arcade, a podcast all about the psychology of game design and why games hit us so hard. Each week, I bring on a new guest, designers, psychologists, storytellers, to break it all down with me. If you play, design, or just love games, follow now.
Electricast.